Hello, I'm Zachary Hogan, also known as IZXTG. I'm here at Start With Trading, and I am very proud to present to you the weekly outlook for April 2nd to the 7th, 2017. We are here on Forex Factory, but before we dive in to the analysis, I do just have two things I want to mention. First and foremost, I am very excited. Just released my new Fearless Forex Fundamentals strategy. So you can go ahead, you can easily click on the screen, you can check out the link in the description below, and you're going to be able to gain access to this information instantly. And the concepts that I'm providing you with, you're going to be able to just follow me step by step, really prepare yourself, and just take your trading to a whole new level when it comes to your fundamental analysis. So I'd recommend heading over there and checking that out. And I do also want to make you aware that last week we did not do the weekly outlook. I did get an abundance of messages, and I definitely appreciate each and every single one of you. So with that being said, that's why I did want to release the Fearless Forex. So it's just my gift to you, so to speak. Now, let's jump in. We're checking out the week of the 2nd to the 7th. So today being Sunday, we got market opening in about an hour and 20 minutes at the time I'm starting this video. We do have the Australian dollar retail sales to make note of. On Monday, we're going to have the manufacturing PMI on the British pound and also the manufacturing PMI on the US dollar. Followed by the trade balance on the AUD to pay attention to. All of these times are in Eastern, so just make sure that you're doing your conversion, make sure that you're staying on top of the news, and Tuesday morning, you're definitely going to want to be prepared if you are trading the Australian dollar because we have their cash rate statement coming out. This is their interest rates. It's going to be matched up with a rate statement from the RBA, and I wouldn't anticipate them to raise their rates. I'm pretty confident that it's going to remain at 1.5, so this forecast would be accurate in my opinion at this time. And if we want to just take a look, typically if the actual were to be greater than the forecasted, that would be good for the currency. So if it comes out at the same as forecasted, we could anticipate perhaps some consolidation or even a little bit of bearish movement leading up just to start off the week. We do have the British pound construction PMI at 430, followed by the Canadian dollar trade balance. And in between that, we will be having Governor Lowe speaking for the Australian dollar, representing the RBA. And he's most likely going to just be following up on things that were happening here with the cash rate. So there may be some volatility around this 5 a.m. hour. Now, we do have the GDT price index on the New Zealand dollar. It's expected to come out tentatively after 10 a.m. So just be aware if you are going to be trading any NZD pairs this week, especially on Tuesday. Now, moving forward to Wednesday, we do have our services PMI on the British pound, as well as the ADP non-farm employment change. So this is an early release, so to speak, of NFP. It's an estimate, it's data that's gathered, so you're going to be able to just get an idea of what could potentially happen here on Wednesday. And we do have the non-manufacturing PMI and crude oil inventories on this same day, combined with an FOMC meeting. So just be aware if you are trading any USD pairs this week. And moving forward to Thursday, we've got unemployment claims on the US dollar, and then Friday, the day that I'm personally anticipating, very excited, especially with the release of the Fearless Forex fundamental strategy. But at 4:30 in the morning, we do have the manufacturing production monthly release for the British pound, and then at 8:30 the highlight combined with our employment change, unemployment rate, the hourly earnings, and the unemployment rate for both the Canadian and the US dollar, we will have the non-farm payrolls coming out. So it is forecasted on Forex Factory at 176,000. That is a little bit low, but we're going to just have to really see. I've already got my bias in place for this upcoming week, and we're really just going to have to see how things play out. As a special surprise for everybody who does take action on that Fearless Forex Fundamentals, we will be going live Thursday the 6th at 9 p.m. Eastern Standard Time. So you're going to want to check that out. We're going to be updating the weekly analysis just to really prepare for non-farm payrolls in the most positive and powerful way. And with that, let's go ahead, let's hop onto the charts now, and we have the US dollar Canadian. So with the USDCAD in mind, I am personally bearish at this time on the asset. And why this is, it's really just been consolidating these last couple of days, just really ranging here within this whole 133 to 134 zone, as you can easily see. And where could our potential confirmation zones be? If we're looking at a bearish confirmation, I'm really considering the whole 1337 area, so I'll go ahead, I'll update that accordingly. You can see where that is in reflection to where price is now. And on the bullish side, I'm really just going to move our zone down about 50 pips, right in line with our old weekly target to the 1.32 level. It's a very psychological zone. It's about 117 pips to the downside at this time, so we're really just going to have to keep that in mind. Our weekly target, I am looking for quite a large movement. This NFP is going to be right down here at the 1.3, right in line with our zone down here that we do have drawn up. So, there is a lot of demand down at that price. I feel we're really just going to have to see how things play out. And when it comes to our price level of interest, this is definitely a big bearish price level of interest that I personally have. So I'm going to just go ahead and update the weekly target to say the 7th, and our bull price level of interest, I'm going to move that down about 100 pips just because I feel it's going to be a little bit more in respect to what's happening right now in the market. So when it comes to our zones, I do feel like this demand zone is still relevant. If we were going to draw an area of supply, I would potentially be looking up at this whole 135 to 1352 zone, but I'm not going to put that on the chart just now because I do wish to see how things play out, how price trades up until Thursday when we go live in the evening. For the US dollar and the Japanese yen, I am going to clean up this chart a little bit because there is a lot going on. For our bullish price level of interest, I'm going to drop this down quite a bit to the 112.5 range, let's say, just to make it more relevant with where things are happening right now. And when it comes to our confirmation zones, I mean, there is a few different areas that I was looking at, but one that really stands out to me on the bullish side is down at the 110.25. So you'll see why I am putting this here in just a minute. Ahead, I'll move that down. And our bearish confirmation, I'm going to be looking at the 111.9 zone. Put that in there. Our weekly target, where would be a good target on this asset? I really do feel like I mentioned, this is going to be a volatile non-farm payroll release, so I could be wrong, obviously, but I would be targeting the 109 zone. We have a nice candle over here in the midst of this big uptrend that I would be looking at, and I do actually want to shift this bearish price level of interest down a little bit. Let's move it down about 100 pips, and it's right around our whole bullish confirmation zone. Now this area up here of supply, again, I do still feel like that's a relevant zone. If we're looking at our area of demand, I wouldn't necessarily feel like this is a relevant zone anymore, so I'm going to go ahead, I'm going to remove that drawing. We'll also keep this minor zone of supply in here as well, because I do feel like there's a possibility, depending on how price plays out this week, for us to go and see a retest up here into this whole bull price level of interest range. If we're going to be looking at the weekly candles real quick, you can see we did have a bullish candle to end out last week, starting our new month, but overall here in April or in March, we had a lot of bullish movement right up to the 116 level almost, but we did close on quite a bearish note right above our 38.2 Fibonacci retracement, which was drawn up on the daily and a couple of forecasts ago. So just because I didn't show you the USDCAD real quick, this is how our month of March ended. So, you know, this to me is a very bearish confirmation. We're really just gonna have to see though, of course. And if we look at the weekly, you can see that we did have a bearish week to end off March of 2017. Let's hop over to the British pound, and this is a pair that I was trading quite a lot last week. Managed to collect a couple hundred pips. It's been treating me quite well. Hopefully it's been doing the same for you as well if you are trading it. If we look at the weekly, we can see we've had 3 bullish weeks simultaneously, and if we want to go ahead and look at the monthly for how March closed off, we did have a lot of bullish price action. We had a higher low than the previous month here, and we also had a pretty nice close, but it was just within the body of February. So we're gonna have to see. I am bullish on the British pound, extremely bullish, if you know you want me to emphasize on that fact. And let's go ahead, let's hop down to the daily. Let's take a look at what could potentially happen for this upcoming week. For my bullish confirmation zone, I'm going to be looking at the 1.248 level, and for my bearish confirmation, I will be considering the 1.263 level. So I'll go ahead, I'll update that accordingly. For my weekly target, I'm going to put this right up at 127, very psychological number, right by our area here of supply. And you know, this whole demand zone that we have drawn up, I still do feel like it's relevant. The only other one that I would consider is right down here at this 1215 zone, but I don't feel like price will be going that low. But of course, there is a possibility. So I do have a buy limit down here at this whole 1215, just in the odd scenario where I do get filled on that. That could be a very high probability, low risk, high reward trade, of course, with the same target up here at 127. For my bullish price level of interest, I mean, just to make this more relevant, I'm going to move it down to 50 pips above our weekly target, just at the top of the zone here. And when it comes to our bearish price level of interest, I feel like just to keep this relevant as well, we're going to move this up to the 12375 level, right in the midst of our area of demand that we have down here. So if you don't understand the concept of supply and demand, I would highly recommend you go after this video and you watch my free training video. I do have a more in-depth course on the Start With Trading website, but you're at least going to be able to get the fundamental information down and understand why price moves in the way that it does, rather than just going into this blindly if you're not already familiar with that concept. Let's go ahead, let's look at the Australian dollar and the US dollar. Now on this asset, I do want to say that I am bullish on it, and that's, again, it's just in line with my overall bias on what I'm thinking could happen with gold for this non-farm payroll, and I'm going to be saving that for the actual analysis that I do Thursday night. So you're going to want to tune into that. There will be a recording if you're not available at 9 p.m. Eastern, but you have to make sure that you get on the reservation list so you can gain access to that. With the AUDUSD in mind, with me being bullish, where could our potential confirmation zones be? For any bearish confirmation that we could get, I'm going to be looking honestly up at the whole 773 level, so right around our 61.8 Fibonacci, just 10 pips below last time's bearish confirmation zone. And our target, I mean, I still feel like it's relevant up here at the 777 zone, so I'll go ahead, I'll leave that there. Our bull price level of interest, I still feel like that's relevant as well. The bearish price level of interest, I mean, I do wish to drop that down about 40 pips just so that it is a little bit more accurate to where price is playing out, give us a little bit of breathing room as well for price to do whatever it wishes to. And for any bullish confirmation that we could get, I would be anticipating the whole 759 zone potentially. So I'll go ahead, I'll draw that up on the chart just so that you can have a visual representation of our zone. And keep in mind, when I say zone, it doesn't mean that price is going to go exactly to 0.759. It could go, 5 or 10 or even 20 pips beyond. It's just I'm looking at that price specifically because given the patterns that I'm recognizing and given my overall bias, it's what makes the most sense to me. So with that being said, let's take a look real quickly at the weekly. And you can see we did have quite a few bearish weeks here, but moving forward to look at the monthly real quick, we did have a bearish candle overall for March, but this is a pretty bullish indicator for me. We've had just a lot of trading. We ended up right in the middle of this whole range that we've had going on since April of 2016. So we're going to just have to pay attention and hop on over now to the NZDUSD. Looking at the month of March, it was very bearish overall. We pretty much took all of this price action back from January, had a very strong bullish month to start the year, but with where we are at now, let's go ahead, let's check out the weekly. This, to me, it wouldn't surprise me to have a little bit more downwards movement, but overall I am bullish on this asset, and you'll understand why a little bit more in a minute. But hopping onto the daily right now, we did have quite a nice double tap down here back from when 2016 was ending to about the second week of March, tap right down to the 6900 zone, and then we moved up immediately about 140 pips. So this, in my opinion, is a very relevant demand zone. We're going to go ahead, we're going to leave that on here. When it comes to this upper zone right here, I don't necessarily feel like it's accurate anymore, so we're going to get rid of that. We're going to update it accordingly just to make sure that we're staying on top of it. And where could be some zones that we're looking at given my bullish bias and given what I'm looking for? Any potential bullish confirmation that I get, I'd be anticipating it just to do a tap down to this whole 695 level. It's about 55 pips below. It was where our bearish confirmation zone was previously, so you can just keep that in mind. If we were to think of our weekly target and where that could be potentially, I'd be looking at the whole 7200 level. It's a psychological zone, 200 pips to the upside, right in line with quite a few interesting levels that we could consider, as well as this important candle right here on the last day of February to start this downtrend. So just we got to pay attention, of course, if we're going to be trading this asset. Price level of interest, I mean, the 7300 is relevant in my opinion. If we're going to go ahead and add up a bearish price level of interest, I would think that the 6,900 is still very relevant, just around the top of our area of demand. So we'll go ahead at the bearish price level of interest, make it yellow just so that it is up there. And for any bearish confirmation that we could potentially get on this asset, I'd be looking about 20 pips above our target, right up at the whole 722 zone. So we'll go ahead, I'll update that accordingly just to make sure that it's very clear. And when we get towards the end of the week, before we go live on the Thursday, we'll be doing an evaluation of everything that's happened for the week. Maybe we consolidate, maybe we achieve our target before non-farm payroll, and then of course we're going to just have to analyze the information that the market is giving us at the time so that we can take effective action moving into Friday morning, because we should be prepared for this event, and I feel as if I'm prepared now. So I'm sharing this with you. The last asset we're going to look at right now is the EURUSD. I am bullish on this asset, and it's pretty awesome how we closed off looking right at our bullish confirmation level from last time's video. So where could we be looking at now? I feel like with how this closed, there is a little bit of potential for it to go lower. So we're going to drop this down right in line with all of these highs, these wicks right here, 33 pips to the downside at the 1.062 zone. For our weekly target, I'm going to be looking at 109.2, and that's getting closer to our bull price level of interest, which will remain the same up at 1.1. And for our bear price level of interest, this 105 zone, right in congruence with our area of demand, still very relevant in my opinion. This area of supply, I mean, I do feel as if it is still a key area that we could pay attention to. It's a 20 pip zone right between that 107.8 to 108 region. So really just pay attention to it if you are going to be trading the EURUSD. For any potential bearish confirmation that we could get, I mean, I would personally be considering if we get back up to this whole 108 zone again. So I'll go ahead, I will add on a price level just so that we have that for accuracy's sake. Go ahead, bearish confirmation, make it purple. And if we were going to go ahead, take a quick look at the weekly, we had a very bearish week. In total, we had a overall movement, just put on my trend line, from the low to the high of about 250 pips. So it was quite a interesting week that we had last week leading up to NFP. And if you just go and you look at how the weeks have been forming since the beginning of 2017, you know, we did start off January with this interesting candle right here, still bullish. It signified the beginning of the uptrend. Right at the first week here of February, we had a pretty decent sell-off of about 150 pips just in that first week, and then it did continue there right up until the last week of February, where we started the uptrend again for the entire month of March minus the last week. So it would not surprise me at all if we do get a little bit of bearish movement, maybe even down to the 106 level to start off this week. But overall for this week, I am anticipating it to finish off as a bullish candle, and I would not be surprised to see if we even engulf this entire last week and achieve the target. But of course, we're gonna have to see. We just need to adapt to the information and go ahead. Let's look at the monthly real quick, and you can see here there was still more bullish interest compared to, you know, what happened last month. And this to me indicates that there still is a lot of buyers who are interested in hopping into this. So, you know, with that being said, that is the weekly outlook for now. Make sure that you take action on the Fearless Forex strategy. Claim your reservation for our non-farm payroll live analysis event happening on Thursday evening. And of course, with that, I appreciate your time. I thank you, and I'm really looking forward to trading this NFP with you. And, you know, safe and happy trading for the entire week. I am Zachary Hogan. You can find me on social media at IZXTG, or head on over to Start With Trading.